Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today, I want to talk about Watchlist. The market was closed, which means it's a great time to tweak your watch list, add things to it, learn more about the companies that you're interested in investing in. So first, what is a watch list? Then we'll talk about how they work and the benefits of having one and why I think it is an underused tool for most people. All right, a watch list is a list of companies that you're watching. These are companies that you are interested in, and one of the great benefits for me is that when you sign up or you click the star button, whether it's on Public or Yahoo Finance or CNBC or almost any app, is always a star. But when you click that star button, usually in the right hand corner, it'll add it to a watch list and you will start to get certain alerts about that company. Usually it's news alerts, sometimes it's price action alerts, meaning it dropped by a lot or went up by a lot, and just gives you more information about the company. The mistake that I see most people make is that they'll get an alert or they'll read one article and say, this is the company I want to buy just because of that and nothing else. For example, Walmart, and I got this alert because it was on my watch list, Walmart is going into the NFT space. They're going into the metaverse space. And if that is a one article you read and you've been hearing a whole bunch of stuff about the metaverse, then you may go buy Walmart and ride off into the sunset. Now, I don't know how Walmart is going to perform based on that one thing alone. Because it's on my watch list, there are other things I know about Walmart, right? So if you have something on your watch list and you are following it for a little bit, a month, 2 months, 3 months, however long you want to do that, then you also know that retail sales were down. You know that they are facing increased competition from Amazon and their Whole Foods partnership, as well as Target, as well as Costco, as well as Kroger. You know these things, right? You also know that with the service, the one day or the same day delivery service, how well is that doing? How many people are signing up for the Walmart Plus program? How bad is inflation weighing on Walmart? Are their margin, your profit margins the same? Are they competing for labor? You also know they raised wages for the people that work in their stores. Is that helping or hurting Walmart? All of these things you would know if you have it on your watch list. And instead of just having one headline to tell you whether to invest or not, you can weigh that compared to all the other things to see if you are making a quality decision for investing in Walmart or any stock. That's just one example. The same thing with, Square and PayPal or Disney or anything else. When you have it on your watch list, you tend to get more alerts and you tend to have the time to read and compare information over time to make a better decision. That is why you want to have a watch list, and you want to rotate things out every now and then. It is not a, like my investing process is very tailored, data centered, it is real strict. The watch list is not, because you're not spending any money. It's totally free. It's what you want to look at when you want to look at it. A great example for me is Roku. Roku is a company that I like. I like the way the company works. It is a terrible stock right now. It was great in 2020. It is awful right now. If you were to just pull up a chart and look at it, it's bad. It's real bad. But why is it bad? So instead of just saying, oh, the company is down, I know why it's bad. They've been arguing and fighting with Google, which owns YouTube, on whether or not to have it on this platform. I know that Roku makes money from selling the TVs, but also charging for the app access. So when you see HBO Max, YouTube TV, those apps appear, Netflix, on their TVs that they own and create, then that is a revenue stream for them. I know that Roku has its own streaming service. I know that Roku bought Quibi. Like, all of these things come together to tell me at this point in time, no, don't invest in the company, right? But if you don't have that information, then you're kind of going into a blind, or you're going off the very first thing that you saw about the company, which might not be the best thing. I see people all the time, whether it's on Public or even in the comments, oh, I just bought this company and it's my first investment. I'm like, ooh, you didn't know you just missed what happened 2 weeks ago, right? You just missed what happened, over the last 2 months or something like that. So there is no, you have to have it on a watch list for a certain amount of time. There is no rule there, but it is something you should have so that you can understand and know what's going on in general and be more informed as an investor. You do not have to be an analyst. You don't have to know every single thing, because it's always going to be something that you don't expect. Square and PayPal, right here, nobody expected to fall the way it did, even though it started off extremely well, right? Same thing with the banking industry. The economy is set up for banking to do well. On Friday for JP Morgan, this wasn't the case. We'll see. And the more information that we have and we collect and we have it on the watch list, the more information that we can use on the next moving day or the next trade or whatever that time is going to be for you. Also, if you're new and you're trying to figure out what should you invest in, put it on your watch list and let the chips fall where they may. It is better for you to learn and watch how things fall out on your watch list and make a decision, as opposed to just jumping in and just gambling and say, all right, I'm just throwing at this company and see what happens. I am not a fan of the philosophy that it takes you to spend money and lose money for you to learn. You can do that, but I can learn for free. I don't know about you, but I can learn for free. I can sit here and watch a stock fall and be like, great lesson. Good thing I didn't spend no money on it, right? And take that and put it in something that actually works for me. There are plenty of times, I've been talking about this for years, where I have thought a stock was going to do well. I put it on the watch list and it didn't do well. Roku is one of those companies for me. I don't know what happened. Thankfully, I didn't put no money in it. So hey, right? So I put it on the watch list. I read, I watched, and it kept falling. I kept watching, it kept falling, and I just let it go. It's still on the watch list, but these are opportunities to learn by having on the watch list and understanding how those things play out for certain companies. So it's free, it's easy. Just press the start button on almost whatever app you're looking at, and just take the time to learn and read more about the company. So what I'm going to do real quick is show you, or tell you rather, some of the things that are on my watch list and why, and then also kind of the two types of watch lists I have, because you have multiple types based on what you want. It's all depending on the platform that you're on and what you're looking to do. So for me, I have a bunch of different accounts for different reasons. Number one, I have one because I teach students on different platforms. That's my job. But the other thing too is I use certain apps for certain things. Personally, I use TD for quick short-term trading stuff. So I have a trading watch list of stocks that move a lot up and down that I want to jump into for short-term things. Stuff on like Public or Yahoo Finance, these are longer-term companies I prefer holding on for as long as I can, or at minimum of 6 months, and then reevaluate at that point in time. So for my more longer-term watch list, I'll just tell you just a few things that are on here. You can access this exact same watch list on public.com/buildingbread. Scroll down, go to watch list, you'll see it right there. So for example, something like Equifax. Equifax was supposed to do well. It's not. It's on the watch list. I would like to know why, right? We talked about BlackRock. I like BlackRock. They're on the watch list. I just decided to stick with Capital One, but I'm interested in finding out more about the company, at what point is going to be a good opportunity for me to get into. That's just a few of them. Iron Mountain, which is a REIT, ticker symbol IRM. Y'all been asking about REITs. That's one of them. We actually did a video about 3 months ago, and that one was still on there then. The company's up just 7% in the last 6 months. They're up 57% in the last year. Again, on my watch list. It was one of the reasons I could have invested in when I did my moving day. Again, when we talk about where the market is moving, what companies make sense, sometimes I'm really just going through and pulling things off the watch list because I've been reading about them, thinking about them, and then I have more information when I'm ready to make that move. So it's just a few of them. American Express is on my watch list. It's a financial company. Signature Bank, SBNY, they're a smaller regional bank. I like small regional banks. I'm interested to see what they do whenever they announce earnings. That's why it's on the watch list, so I can learn more about that at that point in time. So that's just a little bit of how it works. You can go, I'll put the link in the description below, buildingready.com/public. You'll go right to my profile, scroll down the watch list, and just see what's on there. And I rotate that every now and then, but it's a great opportunity for me to learn more about those companies, see what fits, and then also test my thoughts and theories, right? I believe, based on history and research, that financial, real estate, healthcare, consumer staples, these are the stocks that should do well if what we think is going to happen will happen. Rising interest rates and inflation being high. We already know the inflation part of that, right? So maybe it's Capital One, maybe it's American Express, maybe it's Signature Bank, maybe it's Goldman Sachs. It could be any of those or none of those, right? But the fact that I have it on my watch list is going to help to inform those. And it helps me to say, yes, we were right about this. Maybe I need to make a shift here. Maybe I need to make more videos and content about these particular companies. Maybe I need to find more regional banks. Things like that are what help me to move in the right direction. And I don't have to chase or jump at things out of desperation. What a lot of people do is they'll see someone gain or see something work and they just chase after it without having that history. So the fact that you know that American Express is on my watch list and has been on there for a while, if you ever see me come up and say, oh, I'm investing in American Express, it's not because one thing happened yesterday. It's because it's been on there for a while. I've been reading about it for a while. We talked about BlackRock. I've mentioned BlackRock months ago. I even mentioned Iron Mountain months ago, right? So it's on the list so that I can read and feel more comfortable. And when I see an opportunity or everything meshes well together, then we'll jump on it. And again, it happens because it's been on the watch list for months now. I know Iron Mountain for a fact has been on there for at least 3 months when I made the first video about REITs. Go back and check that one out. And you'll notice that a lot of what was mentioned in that video ended up on the watch list. Some we invested in, some we didn't. There you go. So that's the process and the power of creating a watch list and why it's important. How many companies should you have on the watch list? That's totally up to you. I don't think it's hard to keep track of 60 companies at one time. Okay, so start with 10, maybe get to 15, maybe 20 at most. And that's just to really, if you're new to it, to just get out there, see what's going on, and learn more about the market and about companies that you're interested in learning more about. All right, that is it for me. Let me know what's on your watch list and let me know what you think of mine. All right, talk to you guys later. Bye.